Hey friends, welcome back to the channel. I'm Iggy, and I've been covering topics like stocks, finance, CPF, and everything related to growing your wealth. The Investing Iguana is ranked 8th in the 2023 Influential Tigers by Tiger Brokers with over 768,000 reads and 53,000 likes. I've produced over 650 videos with more than 300,000 watch hours as of December 2024. I also focus on regional and world economy topics. Singapore banks are poised for profit growth in 2025 as Fed rate cuts slow down and trading volumes surge across Asian markets. Today's video comes at a perfect time, with all three local banks hitting record highs after the Johor-Singapore Special Economic Zone Agreement. Let me break down why our banks might be your next smart investment move. First, let's talk about interest rates. The U.S. Federal Reserve plans just 2 rate cuts in 2025, which is fantastic news for our local banks. Think of interest rates like rental income for banks. When rates drop too quickly, banks earn less from their loans. With only 2 cuts planned, DBS, OCBC, and UOB can maintain steadier earnings. It's like having a rental property where your tenant's rent won't drop much this year. Here's something exciting about trading income. Our banks are seeing more activity in their trading divisions as capital markets become more active. Picture a busy hawker center during lunchtime. More customers mean more business. This increased market activity is helping our banks diversify their income streams beyond just loans. The numbers tell an impressive story. DBS posted a record-breaking profit of $3.03 billion in their third quarter, beating market expectations by a significant margin. OCBC and UOB aren't far behind, with strong double-digit growth in their fee income. It's like having multiple streams of income. When one source slows down, others pick up the slack. Speaking of growth, loan activity is picking up steam. DBS projects its non-interest income to grow by high single digits for 2025, while UOB sees double-digit fee growth. This is particularly important because it shows businesses and individuals feel confident enough to borrow and invest, typically a sign of a healthy economy. Let me share something interesting about their financial strength. All three Singapore banks have significantly improved their capital positions. Their common equity tier 1 ratios have climbed impressively, with DBS and OCBC both reaching 17.17% and UOB at 15.49%. Think of this like having a strong emergency fund. It means our banks are well prepared for any economic challenges. But here's where it gets even more interesting for investors. The banks are being quite generous with their shareholders. DBS has announced a $3 billion share buyback program, and they still have excess capital of around $3 billion to $5 billion. That's like a company saying they're so confident in their future that they're willing to invest in themselves. Now let's talk about what's happening in the broader market. The Monetary Authority of Singapore is expected to start loosening its policy setting in January 2025. This could create an interesting environment for our banks, as they've already positioned themselves well for any changes in interest rates. Here's something many investors might not know. Our local banks are also benefiting from regional expansion. The recent Johor-Singapore Special Economic Zone Agreement has pushed their shares to all-time highs. OCBC rose 4.15% to 17.55, DBS climbed 2.11% to 45.44, and UOB increased 2.02% to 37.80. This shows how our banks are not just local players, but regional powerhouses. Looking ahead to 2025, there are some key factors to watch. The implementation of the global minimum tax will affect profits, but our banks have prepared well for this change. They're also expanding their digital capabilities and wealth management services, which should help offset any impact from interest rate changes. For those wondering about risks, yes, there are some things to watch out for. Global events can shake things up quickly. Interest rates might not move exactly as predicted. Market moods can swing from optimistic to worried in no time. Think of it like weather forecasts. They're usually right, but sometimes surprises happen. Here's what makes this opportunity particularly interesting for Singapore investors. Our banks have shown they can grow even in challenging times. Their wealth management divisions are expanding, trading income is rising, and they're maintaining strong capital positions. Plus, with the new digital asset regulations coming in, they're well positioned to capture new opportunities in fintech. Let me wrap this up with some key takeaways. Our local banks look strong for 2025. They've got multiple ways to make money, not just from loans. The slower pace of rate cuts helps them maintain their earnings, and increased market activity means more opportunities for profit. Before we end, here's what you can do next. Take a look at each bank's latest financial reports. Compare their fee income growth. Check their loan book quality. These details will help you make a smarter investment decision. If you found this helpful, you'll probably like my video, DBS versus OCBC versus UOB. Which SG bank is your best investment bet? I'll link it in the description. Don't forget to hit like and subscribe for more insights on Singapore investments. See you in the next video.